I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Bob Hoye. He's the Chief Investment Strategist for InstitutionalAdvisors.com. Welcome back to the show, Bob.
Yeah, hi, Jim.
The Canadian markets back on the way up as we speak on Friday. The U.S. market's still in a downturn. Is that temporary in the U.S., or is this going to be the pattern we're going to see from now on?
Yeah, well, they had a good pop here recently in the TSE index. I think it was gold shares had a rally. The gold shares should not be included in an industrial type of stock index because they often go counter to what's happening in industrials. Indeed, when I started in the business, it was almost to the hour. You'd have a end-of-the-day report, and the Dow Jones would be up, and the TSE gold index would be down, and then a few days later it'd be vice versa. So, but that gets us into a lengthy story. But at times, the gold shares can go opposite. We've had a strong bull market in the big market now since 2011. And since 2011, you've had a bear market for the gold sector. But if you look back in history, in a great financial boom, gold stocks have either gone down or underperformed as everything else becomes the darling of the day. So there's some of that in this, and as we've been pointing out, the sentiment numbers are extremely bullish, and momentum numbers have been high, like big bursts of activity, and recently, and then we've got some technical measures that relate to momentum, and they're about as high as you get on readings like the weekly, the daily, and the monthly, which is quite something. And then there's another one we've got, what's called a sequential sell, and that's based upon a pattern of things. So both momentum type determinations and pattern are exceptional. The only question is, and we've been on to this since early October, that it looked like the Dow was going to go into a big bubble zoom, which it has been doing. And the other one is that we look through history to see if there have been some previous really big speculative moves conclude around the year end. And yes, there have been. The big bull market in the stocks that completed in January 11th, I think it was, of 1973. And that was a great bull market, and it was followed then by the worst bear market since the 1930s, so it was important. And then you move ahead, and you had gold and silver, which was a fantastic speculation. And that concluded, I think it was January 21st. I know it was January, but my memory is January 21st of 1980. And then it was a lengthy bear market for both of those precious metals. And then the other one, moving along chronologically, was the Nikkei Tokyo Index, and it peaked in the last trading day of the year in 1989, and then went down for decades. So this is been a fabulous bull market. Began from a totally wiped out and exhausted condition in March of 2009, and here we are getting towards the end of 2017, and there are again signs of speculation, so excessive speculation, but we've had these before. Like in June there was a cluster of them, but that's when we had a target that the New York market could rally through to September, and we got there, but it wasn't dramatic enough. Excuse me. And so we started looking for, at least the rally early October said, hey, you're past the times when bad accidents can happen, and we're called for the bubble up in the Dow and other indexes, which we're getting. So the conditions are and as I said, momentum and pattern are getting things you see close to important market tops after a long bull market. So the conditions are quite precarious, and you've got the stock analysts on one side. If you take an individual stock and say, oh, look at this, really looks good. Their earnings can be, 10% better next year. And then you kind of leave out the fact that maybe that PE multiple is exceptionally high. And there's a service that I know, they take the S&P and divide it by in the States, the Bureau of Labor calculation of the average wage. And so what you end up with is the number of hours one has to work in order to buy a unit of S&P. And it's even higher than it was in the mania of 2000. So valuations are exceptionally high. We've got momentum, and we've got pattern for tops, and also possible target, year-end, somewhere in there. So it'll be fascinating to watch it work out. But what you have, Jim, in between is that the conditions are precarious, and in previous precarious bull markets, they were brought down by a change in the yield curve, which is the difference between long end and short end of Treasuries or Government of Canada's. And it's still in a bullish mode. And however, the other aspect of credit markets, which is credit spreads, is the difference between high-grade and low-grade bonds. Oh, yeah, it's been very good for a long time until a few weeks ago, and then it reversed, and in the last week, if you take a look at just the CCC-rated bond, it rose in yield by 80 basis points, which was very fast. So yesterday was sort of a bounce back against that, but we can say definitely that credit spreads have become volatile, and if this indeed is a trend change, it's not going to do the stock markets any good. So
we'll have more with Bob Hoye right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Bob Hoye. Bob, what do you see happening with crude oil? Saudi Arabia is encouraging its OPEC fellows to extend their production freeze.
Yeah, and then also within Saudi itself, you've got a sort of it might be a reform movement going on where the new king, or about to be new king, is beginning to reform and clean up things, and there's so many individual princes there with such huge amounts of money that it would be difficult to be a non-corrupt system. And sometimes it looks like the new regime is just attempting to grab as much money as possible. And then other times you read it and you think, well, maybe they are trying to reform. They say they're going to try and bring in more Western type of culture, which would be good. So I'm tempted to think that it is a reform. Underneath it all, there's an honest urge to reform excesses by extremely wealthy personalities, which would then fit in with reform that's being attempted elsewhere. Brexit and Austria and Czechoslovakia in recent elections have taken a reform ticket. So now what's this got to do with the price of crude? Well, there are investors around the world who position crude, or many institutions position oil stocks, strictly on the probability of something really going wrong in the Middle East. I think 30 years ago that was a more reasonable bet. But the problem is now there's so much oil production from outside the Middle East that ploy is no longer as valid as it was. And it's taken a number of years for the oil stocks to start acting like mining stocks. Of course, mining base metals don't have an OPEC, whereas crude does. But the thing is to understand that OPEC is losing power. Whatever they had, 40 years ago is quite different from what it is now. So what you have to do is realize that crude oil is another commodity, and you play it from oversold to overbought. And on the rush here to 56, 57, it was approaching the RSI got up there and momentum and stuff like that. So, and then we reminded ourselves about that crude oil can often have a pretty good low in around January of each year. And I think that can still happen. But, this one, with the most recent rally in oil price, the oil stocks were really not performing. They kind of were, they went up, but it was relatively poor performance. So I don't like the sector at all on the oil stocks. And the product, it's sold off now, and I think it can go down until around January. This then feeds right into credit spreads, because I think it's about 18% a few years ago of new junk issues were in the oil patch stocks. And then, of course, as crude oil goes down, other raw materials go down. Industrial commodities have had a fairly good year, particularly lumber more recently. But the base metals look like the best is in, and they're beginning to weaken. And again, the the stock side of it, the base metal stocks, they were brilliant coming out of the disaster into February of 2016. You remember that's when crude oil got down to 27, and base metals were hit hard. And then the index, the XME of base metal mining stocks, it got down to 11. And then in February of this year, what did it get up to? 36 or something. Well, it was a triple anyways. Outstanding. They were all piling into it. So that it was too much too soon, and then it was correcting for a while. But this year, or later, latter part of the year, they've been really underperforming and declining. So often the base metal mining stocks will lead the changes in base metal prices themselves. So, and then often on copper you can have a seasonal low sort of in November, December. Well, the November one has been deferred, so maybe it might be like 2016 where the base metals sold off hard with crude oil. So, and then if you've got then base metal prices going down, which they are, and crude oil, which it is, and then the last one is lumber of the what we call the industrial commodities, and it set a peak a couple of weeks ago with really outstanding technical momentum and everything. And we've noted that in the past, lumber likes at a peak, an important high, will like to do 3 tops, So we had that one, correction, and then this week a higher high than a couple of weeks ago. So that might be peak number 2, and who knows how we get number 3 in. But anyways, lumber prices have been to the moon and are now vulnerable. So it doesn't look good for industrial commodities. However, last week we looked at the chart for agricultural prices, and they've been not playing with anything for a year or so, and rallies have been modest, but they kind of look like they were building a base. And this week they've moved up somewhat, but one has to look at there's an exciting thing going on, Jim, and for this old geophysicist which watches these things, the amount of increasing of carbon dioxide in the atmosphere, as the hysterical people tell us, is extraordinary and up to 400. And it isn't extraordinary. It's been much higher in the past. But what it is moving up, it is a noticeable increase. And with satellite measurements, you can determine just how much green between trees, bushes, shrubs, grassland is. Or in dry areas like the southern Sahara, the green is moving north. So there's been a noticeable increase in green as by satellite measure, and that relates to CO2. Our listeners should go to the computer and look up the formula for photosynthesis, which shows just how important CO2 is to the formation of basic life. I mean, all life depends upon CO2. So I think it's an easy thing to say that if you got all plant life becoming greener and more, it's going to enhance crop yields on all the agricultural products. So eventually there's kind of a lid on whatever it rallies agricultural prices may do. From time to time, whether you're looking at wheat or soybeans or whatever, there could be local constraints on yields. But overall, for the world, the increasing CO2 will really enhance crop yields. So I think the grain index can rally but not so far, and nothing too exciting, I think. And then also the other one you got against most commodities is the U.S. dollar index, which had its worst some time ago, sold off down to 91, all kinds of technical stuff on the degree of sell-off, rallied up to 95 and needed a correction. So I think if it holds here above 93 on the DX and builds a base at this slightly higher level than the 91, and then it would be building a nice technical sound base for the next advance. And certainly commodities do not like an advancing dollar, nor do the central bankers. So we hope that central bankers become very confounded by a rising dollar. Because you think about it, Jim, ever since the Federal Reserve started and economists got a hold of it, the best policy, no matter what is going on, real or imagined, has been to depreciate the U.S. dollar. So if that is the good, as they think, then a rising dollar has got to be really bad in their terms, and indeed it will be, because each of the financial contractions, whether following 2007 or following 2000 or going back further, you ended up with a rallying U.S. dollar. So the dollar is building a base for the next advance.
We'll have more with Bob Hoye right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Bob Hoye. Bob, is there any truth to the myth or belief that some people right now are looking at copper kind of in a monetary way, the same way they would look at gold?
Oh, there could be. Yeah, I think most commodity perma-bulls, like they're bullish on commodities all the time, like Jimmy Rogers, that one's founded upon the notion that the Fed is evil, which it is, and it will depreciate the currency. Now, there are times when the central bank cannot depreciate the currency. And the people that don't like the Fed and it's evil, yep, if they are base metal people, then dollar depreciation will force their favorite thing to outperform all others. Then you go over to the gold guys and, yep, the Fed is evil and dollar depreciation is going to happen, but it will favor gold. But what we find is that in an expansion, an economic expansion, base metals will outperform gold. And then in the contractions, gold will outperform base metals. So I think the gold community, the precious metals community, has got itself into an awful box here, because their theme, which was discovered in the 1970s, that the dollar went down and gold went up, it hasn't been working since 2011, because the Fed has been more reckless than it's been in its lifetime. And for a gold person, and you take this guy Rickard, number of times in the last 12 months he's been calling for $10,000 gold. It isn't happening, and it won't happen, because in a post-bubble contraction, which we're not yet in, but in previous post-bubble contractions, the senior currency has become chronically strong relative to most other currencies and most commodities for most of the time. with interruptions by the business cycle. So the next phase of a post-bubble contraction, who knows when it's going to come, may be visible sometime next year, but it will be associated with a firming dollar. So this is driving your both base metal commodity bulls have been profoundly confused, even perplexed by what's going on, but we got no problem with it, because what we are in is a period of inflation in financial assets, whereby commodities do not inflate the same way. It's like the 70s. Commodities were inflating, and the stock market wasn't. So then at the end of 81 is when the inflation in financial assets, or in commodities, ended, and the inflation in financial assets started. And that inflation in financial assets is still on. And as I said, we've reached the highest evaluations in history for the stock market. And this is what the commodity and gold community has yet to figure out. Their problem is they figure that currency depreciation favors only commodities or gold all the time, but they haven't figured out inflation in financial assets. But what happens is when inflation in financial assets blows out, is like 1929, then you go into no inflation in anything, and the value of money soars. This is where in the 1930s the economists were going crazy with people hoarding money. They formed associations and printed up placards and stickers to put on the door windows of retail shops. Don't hoard your money. So, but when the price of things are falling, you kind of money's going up in purchasing power. So this is what, to wrap it up, Jim. Once you've fully completed the inflation in financial assets, then you get deflation in both tangible and financial assets. And no matter how hard the central bank tries to print, it ain't going to happen. There will be a contraction, and it'll be on the one benefit from it. The Keynesian economics will eventually be condemned by most people. It'll be good.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Any questions for Bob or any of our other guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.